Man, that was about to. Welcome to
We're
2023, where the tech isn't working either. Yeah.
And it's not my fault. Although, look, my hair is cooperating. It's such a lovely day here in Austin. It's kind of like the sage bush when it's blooming, it's going to rain or it's humid. My hair is not freaking out and curling up like.
I wish I had a picture to pull up to show that.
Well, when anybody sees any of the other.
What?
Oh. Is it not working?
What? Hold on, folks. Got to see if this is working.
There's countdown. It looks like it's not working.
No, it says it's recording.
But there's a timer over there on
the timer should be going. What is going on? This is annoying. This is really annoying.
Tech.
Yep. Got a lot of.
Can't live with it. Can't live without it.
Well, it looks like it's going, so hopefully y'all can.
Yeah, but it looks like it's paused. Oh, let's see.
Let's see.
Is it working?
That's the ringer. Oh, says it's live. Says
all
okay,
right,
good.
Woo!
Man.
Well,
I was about to get mad.
He's responsible for the tech, not me.
Blame me. Let's do this again.
Hello, happy 2023, guys. What
Good
year
morning.
is it?
It is 2023.
Yeah.
It's Friday the 13th.
Oh, yeah.
It's January, Friday the 13th, 2023. I saw a meme the other day that said January, it's the month of Mondays. Like it's the Monday of the year.
That's true.
It's the
That's true. That makes
I don't
sense.
like thinking that way though. Like, oh, it's Monday.
No, I mean let's just put it this way. I'm tired on my birthday after all the holidays because it starts in January, and I'm just I don't care.
It's her birthday month.
It's my birthday month.
It's her birthday month.
I don't want it to be Mondays only. So that's
so great. So great.
So a lot has happened in Austin in the last. I mean, it's been several years, not just last year.
Yeah,
but
that's true.
We'll talk about last year.
A lot has happened. That's the question we always get. What is going on with the market? Is it how hot is the market? I hear that it's hot. I think that I think I'm thinking about selling.
And also, is it a good time to sell? Is it a good time to buy? And I often reply that it's all on how you frame the transaction.
Yeah.
That makes it good or bad.
Yeah, it's about your financial needs too. Sure. So yeah,
lifestyle needs. Fine. Yep.
Yeah. In case you can't tell by the headlines, we're going to do an Austin market recap. So okay, so here's anecdotally, I'm a seller. It's January 2022. What do you say to me?
Get your house ready and get it on the market now.
Okay.
And, I had a couple
what's
clients
next?
like that.
And what after that?
What do you mean? Like it shifted in a couple of months.
Yeah, but what I'm saying is okay, yeah, get your house ready, put it on the market. We're going to price it at 6. It's probably going to sell at 750.
Right.
And I need you to know what you want to do next, because we're going to have the next house set up. We might be able to do a lease back, like all the things.
Yep.
I mean, we were joking earlier. We didn't even have time to do these market updates until middle of the year last year. And so from May of 2020 to May of 2022 almost, there was not time to do anything but talk to a client,
negotiate deals,
get them into a home to see them, or talk to a listing client, get the home ready to go on the market. And there was no time. There wasn't
a lot of time. No, because you definitely had to, especially if you were, on both sides, if you were listing, like you said, do you have a house to move into? Do you need to do a lease back? And for buyers, it was, where are you going to live until you can move into that house?
Yeah.
And financing. Of course, these are all things though that we really talk on a regular basis.
It's just the timing was truncated.
Yeah.
Okay.
Yeah. So what's going on in the market? What's the number one question you think we hear?
It's how's the market now? How's real estate now? They either heard some of the headlines, or they haven't been keeping up and they want to know what's going on. Last they heard, the market was hot. So what's interesting is what got us into this mess back in 2020, right? I mean, you can say COVID, but there were other things that were going on.
Oh, there were a lot. I mean, like you said, it's a perfect storm. So what were the parts that made it that way
in 2020?
Mm-hmm.
So what happened?
Interest rates were historically low, and they're still low considerably, considering if you look, and we'll look at those graphs later, but they were so low that it was
free money.
It was really inexpensive money. So you not only had people who had to buy a home, you also had investors who were using that money to borrow and leverage to buy properties. So it was a perfect storm with interest rates because of COVID and
supply chain
issues. So that, but you know what? Quite honestly, what we've heard is that the low inventory was 10 years in the making, because after 07 and 08 and even 09, builders couldn't get the loans to develop. And so we actually still have.
There was a national downturn in new construction, new builds.
Right.
But remember, beginning of 2020, we were already thinking the market was going to slow down, because we knew builders were going to slow down because the lumber was getting more expensive.
Right.
So when you completely cut off the supply of that lumber, builders pulled back from, I'm making the numbers up, but to communicate the exaggeration, 5 homes a week to 5 homes a quarter, if that.
Right.
Like they were shutting down their offices. So there's a ton of the inventory that was gone.
Right.
Then you had people that didn't want to put their home on the market. We're in the middle of a pandemic. Those homes were gone.
Right.
Then you had people that could live and work from anywhere, and they didn't want to be in an apartment.
Right.
So it was musical chairs. There's 5 chairs and 20 people trying to get that one chair.
Right.
So prices just
kept inching up. And
now fast forward 2022, what happened?
Well, in 2022, one thing is inflation, and that led to higher interest rates. And so anytime there's a big change, people kind of freak out a little bit.
Right.
And so
we all do. We're human.
We all do, for sure. And, you and I have said this recently, that we've been in the business a fairly long time, and both our parents were in real estate. So we have seen the fluctuations happen and know how to navigate it and at least remain calm.
That's right.
And again, as we said before, earlier, just a few minutes ago, that it's all in how you structure your offer. And so we have to focus on asking our buyers and sellers, what is their motivation? What do they need? And be realistic too, if we can meet those needs. But
because it's about their portfolio. It's about your entire, it's all of your financials.
Right.
It's not like an apartment where it's 33% of your income. I mean, when you talk to your lenders, that's a part of it, but it's not the same. It's now you're investing in something. It's going to be an asset. It's going to be it's going to be a resource for you. It's going to take resources from you. So it's not just how much is my monthly payment going to be. We're trying to figure out the lifestyle you want to live, right? For buyers. And then sellers, typically what you're doing is you're changing your lifestyle.
Right.
For some reason, you're an empty nester or
getting a bigger house, getting a smaller house, moving, relocating, which we do a lot of course. But it really comes down to the motivation and what is it? And that's why we ask those questions. And
that's part of the reason the market took off, because I can make $400,000 on my home, and I can move to this other state and pay cash for a home there.
Right.
So I'm cashing out while the market's great.
And we don't want to diminish when we talk historically speaking about the people who have lost money, equity. Let's say equity, because it's in their home.
That's right.
But what we'll talk about in a few minutes is how, if you bought in the Austin area and if it did decline some,
just
hold on to it, because
have you seen the cranes of Samsung out in Taylor?
Yeah.
There's 20 of them or more out there.
Did you say that they're looking to add more too?
Oh yeah, there's companies that are looking to
but
move
I thought
out there as well.
Samsung was talking about
they may add.
Yeah. They're exploring.
And we're going to get to some headlines here in a second, but what I think is interesting is I wouldn't say the exact opposite, but by end of first quarter 2022, builders' supply chain wasn't an issue anymore.
Not
all
as
of a
much.
sudden, they went from 5 homes a quarter to 5 homes a week again.
Right.
Right.
Yep.
So everybody talks about interest rates skyrocketing.
Right.
I mean, yes, that was part of it, but there was like a perfect storm of stuff that happened.
Sure.
There were people that bought back in 2020,
right,
didn't file their homestead.
Yeah.
And never filed their homestead. And right around 2 years later, the value went so high that they couldn't afford the home anymore. We had investors that couldn't afford to keep their tenants anymore. So you got builders dumping inventory into the market. You got these resale homes that they have to put on the market for
Right.
various reasons, and interest rates went up.
Right.
They went from roughly 4% to almost 7%.
Right.
And each percentage point is how much loss in buying power.
Right.
10%.
Yep.
So,
but as we've said before in video, date the rate,
marry the house.
Yeah. Marry the home.
Yeah.
Yeah.
There's some people that don't like that one.
Well, I know.
I'm kind of on the fence on that one.
Well, I know, but it is one of those things that the rates you can buy down, you can use some of the cash that you might have to buy it down.
Yeah.
If you love the home, let's try and structure the deal so that it's comfortable for you.
Makes sense.
And this is one thing that I did have some when I was working with a few investors.
Yep.
Is property taxes were an issue for them.
Yeah.
In breaking even. So
makes sense.
It's all those so many moving parts in a transaction, and that's what we're here for, is to help people navigate all of those parts.
Well, I say let's get to the recent headlines. What do you think?
Go for it.
Which one first? Which one do you want?
I don't either any of them. There's a few of them. So
let's see, I gotta see if I can reorg this so you guys can see this more.
Yeah, make us smaller. Yeah. So
yeah, look at that one.
That's quite a big story. And what part of Austin does this affect?
Well, I mean, right now the Gigafactory is near Bastrop, and they had to even petition Del Valley ISD for a tax break. So I think this impacts that part of town. But I mean, you're crazy if it doesn't spread out from there.
Oh, it does, because like I know someone bought a house and land behind me, and they're at Tesla. Mm-hmm. And I'm Northwest Austin, because there is a way to get there that's not
the
too
toll
bad.
road. Yeah, toll 30. You kind of the Great Divide. Yeah.
We have Tesla. The largest impact or biggest impact is Southeast Austin, but it will obviously affect the market. It'll go out like a Target.
Yeah.
It'll expand that area.
Yeah. Ripple effects.
Ripple
I think.
Effect. Thank you. I couldn't.
I mean, everybody keeps talking about Tesla, but they forget Elon Musk has several other companies that he's talking about bringing here as well. There's SpaceX.
Yep.
There's Starlink.
There's
the Boring Company.
Yeah.
But are they actually here yet? See what I mean?
Sure.
Like years ago, Oracle announced shortly after Apple, but they've still been bringing in Oracle people.
Right.
So they announced that how many years ago?
Mm-hmm. So
with our relocation experience, during COVID, people are like, where are all these buyers coming from? Well, we knew about a cache of transferees that it was at least 2,000 that were waiting to come here.
Right.
And that wasn't necessarily, out there in the ether. The company wasn't telling people that. I'm sharing it with you now because 2 years later I can.
Yeah.
But HR was sitting on.
They were sitting
2,000 plus people.
And people, again, didn't have to go into the office. So it wasn't until they're now asking people to start coming into the office that you're seeing that trickle of more people coming. So, right.
So, next headline.
Next one. Yeah.
Next one. Let me get rid of that one. Let's see if we can show this one. Oh, not that one.
Wrong one.
That's Aaron.
Hello, Aaron.
That's Aaron. Sorry, Aaron. You're next, dude.
There we go. So this is in Northwest Austin.
Yeah.
So you have Southeast Austin, Northwest Austin, and what did Apple do?
$240 million. Now, keep in mind, they were already committed to this. We knew this was coming.
Right.
We knew this was coming.
Right.
Tammy says hi, by the way. Hi, Tammy. I mean, so people forget that the campus that you see off of Parmer, the intersection there of Dallas and Parmer, that Northwest, that's actually just phase one. There's 2 more phases to come. That's a total of, right now, the campus that's there that you can see being constructed or being finished, think of that as 5,000 jobs.
Yeah.
There's 2 more phases coming. So 10,000 more jobs coming to that area.
Yep.
right? And then, I mean, again, the Samsung mega, whatever you want to call it,
Right.
what's beyond giga factory? that chip plant that's coming in Taylor is gonna overshadow all of these things that we're talking about. But what's interesting is you hear the I guess I'll say negative headlines of Facebook pulling out. They were going to do a data center in Temple. They pulled back,
and they had the building downtown,
and they backed out of that.
Backed out of that
they've
lease.
had to sublet it, so they had to break the lease.
Right.
But it saved them more money to break the lease and sublet it.
Sure. And that's and again, that's crazy. There's going to be ebbs and flows, and as you know, I like to say we do not have a crystal ball.
I do. I don't know about you.
Where?
I'm not saying.
I'd like to do a little looking, but we don't have a crystal ball. Nope. We cannot predict it all. Did we get out or what?
No, we're still there. I'm just removing this while we're
and
talking.
Hi, Jackie. We do not have a crystal ball, so we can't guarantee anything. But having the growth, Southeast Austin of Tesla, Northwest Austin of Apple, and northeast of the Austin area and Taylor with Samsung, there's all this open space where they can build new homes, and the infrastructure is being built too, as we see in some of the 183A and the
183 new HOV toll lanes. HOV, right?
Yes, I think so. I
think more than one passenger high occupancy vehicle toll lanes
going all the way up from Central Austin to Liberty Hill.
Yep.
So anyway, so we're seeing signs of that growth and prediction that it's going to happen. So again, people on hold to buy homes. Yes, there was some correction in pricing. That's going to affect mostly people who bought in 2022. It's going to recover. Well, if you stay in your home 5 to 7 years or so, you're going to recoup that.
Yeah, I think you'll be fine. I think you'll be fine. There was it was Gary Keller and a mastermind that we were on last year. They were talking about numbers. I think it was towards the end of Q3 where they were saying that what it looks like is everything that happened in 2020 to 2022. It took our annual kind of 5-year appreciation and it squeezed it into 2 years instead of 5 or 7 years.
Right.
So basically we got to have a little bit of a correction, and within the next 5 or so years, you should see your equity come back. Now, appreciation is something different. And again, this is where we don't have a crystal ball. It's, it's best guess. We're reading the trends, but that's what this is about today. It's, hey guys, here's the stuff that we're looking at, right? Here's the numbers we're looking at to be able to tell you where we're coming from. And even anecdotally, things that we're doing with our listings and buyers.
Right.
Yeah.
And if we just look at the history of our family, our parents, we moved to Texas because of a downturn in the 80s, early 80s. It's like every few years you're going to see a correction, and, it happens. So plan ahead.
So let's see, here's an idea of pricing and corrections, right?
Right.
So back in 2009, now this is nationally, right? We're talking about, this is percentage change year over year. January 2009, prices had dropped 12.7%, right? March 12.7%. I mean, it starts climbing though. What's interesting is right in here, 2009 to 2010, almost 11, there was a first-time home buyer tax credit that people were taking advantage of.
I remember that.
Right?
Yeah, right.
But this is when you want to talk about downturns. This is when people were like, man, I wish I would have bought back then.
I know, exactly.
Well, look what's going on here.
Yeah.
Right. We'll get over there. But
2010,
there was, we're starting to see a comeback in the appreciation, right?
Right.
It stalls a little until 2012, and then it just starts taking off again.
Right.
And remember, 2013, look at that, 8.34%.
I know.
Appreciation.
Well, yes, and prices were a little different then too. But
that's true. But still, I mean, remember 2013?
Yeah.
I remember walking the halls, and one of the agents goes, "I just put a sign in the yard. Somebody drove around the corner, said, write it up."
Yeah. 20. I know.
That was crazy.
I know.
It's crazy.
Yep.
So there was the last little, uptick, if you will. And this is all nationally. We'll get to local numbers soon, but this chart does kind of reflect what happened in Austin at the time, right?
Yep.
things kind of slowed down, and you had pretty consistent appreciation, 5%.
Yep.
5%.
Yeah, we kept seeing 6%, and that's
well. And here's what's interesting: 2019, it was 3.81%, right?
It
maybe
goes down a
3 point something, right?
Hovers around 3. Yep.
We were expecting a little bit of a downturn, and then watch this.
Yep.
2020, May 2020, 4.27%.
Eek.
That's November 2029.
Yeah, and this is, like you said, national.
Yeah, this is national. So
we have some neighborhoods in Austin like that, 20 and 30% appreciation year over year. Yeah.
Well, and this is what the part of the reason I'm showing this nationally is you get the major news organizations giving headlines of what's going on in real estate. And here's what they're looking at. They're looking at the national numbers.
Right.
Real estate's hyper local.
It is.
Like you can go to a neighborhood and different sections of the neighborhood are going to perform, right?
Different. Yep.
So let's see if it gives me something. Here I am, September 2022.
That was still, though, impact of the summer.
Right.
Yeah.
Right.
Now we're.
But still, I mean, just by looking at the line, I mean, January 2021, 11 something. Let's see if I can get to show June, March. Trying to get January in there again. Still 19%.
Yeah.
I mean, that's just.
But that's in 2022.
Right.
Where are we now? That's
where it was trending. Yeah. And then what I'm going to do is I'm going to share another one. Give me a sec, everybody. We'll share this one in there. Look at that. This is Case Schiller. They do these. I want to thank Max Lehman lending team for this. By the way, we stole this from you guys. Sorry. Had to borrow it.
Borrowed it. Yeah.
Borrowed it. So, of course, this is different cities. They're just tracking different major cities across the country, right? Here, look at housing appreciation and cities across the nation. There's Dallas at 14.65, right? Denver 11.58. If everybody thinks Austin is bad, look at this. Miami 17.
Tampa 18.
Tampa 18.76.
Yep.
Tom Brady, you're welcome, right? Charlotte 15.3. Atlanta, Georgia 14.11, right?
Right.
Appreciation last 36 months in the top 20 cities. It's not just Austin that we're seeing this in, right?
Right. No.
Right. No. So again,
it's all in the numbers. We just, that's what we use are the numbers that we get. And that helps us talk about. Yeah.
So numbers, interest rates. Where's it at today?
Yep. Hey, Aaron.
Hey, Aaron. Where's Aaron right now? 6.14.
Yep.
That's,
yeah. But
30-year fixed.
Again, yeah.
So
yes, we had a really low dip there for a long time, and
but Monday, October 31st, 7.2. Okay, let's go back here to this low point. August 1, it was 5.28.
Yeah.
This low point, 4.01.
Yeah, what's the
in
other
March?
What's the lowest one over there?
I'm sorry, February 28th, and then let's go back here. January 17th, almost exactly a year ago, it was 3.69.
Right.
So yes, interest rates had a little bit
and that obviously affects people's buying power. And again, this is where if you try and structure the transaction to help people.
Yeah, as a seller, the converse of that is your pricing. Buyers, we're going to get to it here in a second. See how the cost of living went up. So buyers got out of the market. They're like, that's
or I'll
too
make
much.
do with what I've got. So I don't. Yeah.
Yeah, that's too much. I'll just stay where I'm at. And so pricing changed accordingly. Real quick, I'm going to show this one too. I like this one. Max Lehman.
And speaking of, as I mentioned earlier, if anybody wants more information on this, just reach out to us.
Yeah. What's the phone number?
Don't even ask me that.
512-222-6881. Info at
theottgroup.com.
There you go.
I have Theresa. or Chris.
Yeah.
But we can drill down these numbers with you. And this is what we do with our clients, buyers or sellers, so that they understand what we're working with. But
this is the crystal ball. This is what we're trying to read the market.
Right. The tea leaves,
that's right. The tea leaves, right. I like this one because look at this, 1991.
Yeah.
9.25.
Yeah. And in the 80s, it was higher than that.
Right. So great. Right. What were the prices back then? But look at the interest rate.
Yeah.
Right. Yeah. We'll look at the prices here in a second. Right. And then I remember, okay, so I got in the business in 2003. We were throwing parties.
Yeah.
We were throwing parties, 5.83.
5.83. Yeah.
Yeah.
And that's about where we're at now. And we're, worried about it. But
I remember the world was ending because the interest rates started going up. Oh my gosh, it's almost 7% again. Right. Yeah.
And again, as you said, prices are different. And so that affects buying power. But that's why there's a correction, and that's where it's going to adjust.
Yeah.
Yep.
Yeah.
So, and where are we now?
Just some perspective.
Where did we end it?
So over here, it was 6.7 at the end of 2022.
Yeah.
We're not there now. Right now, it's, right close to 6%.
Sure.
Yeah.
Sure.
There you go. Love that.
That's a good one.
Yeah. That was a great one. All right.
Hyper local.
Okay. We'll go with local.
Yeah.
We'll go with local. Check this out. I love Texas Real Estate Center. Yes, I am a geek. Yes, I know. I know. We can, by the way, guys, all these resources are available for you. We can send them to you. It's not like, we have well, we do have some secret stuff.
We do have some secret stuff, but
this is all stuff that you can take a look at. Yeah.
Right.
So now we'll look at the Austin metro area. Hyperlocal means what?
Well, there's parts to that. Hyperlocal is Austin metro area compared to national. But if you drill down even farther with neighborhoods, because schools, commute times, all of those things become
amenities.
Factors. Yep.
Yeah.
Are you open to renovating a house? Do you want it brand new? All those things.
Do you want to be right next to the lake? Do you want hill country view?
Right.
Yeah.
And it's kind of like I've said in the past, if you look at Austin metro area, the bullseyes downtown, and you have the rings going outward, but we're starting to get separate bullseyes overlapping. I think
so too,
because you have central Austin, but then you also have northwest with Apple, southeast with Tesla.
That's right.
Northeast with
that's right,
Samsung.
I mean, so this metropolitan area, the shaded in area that you can see, isn't even actually all of the metropolitan area. It's Hayes, Bastrop, Travis, and Williamson County that all fit in, and they're not. You're not even covering all of that area. Right. At the top of this map, you might be able to see it, guys. I'm see if I can zoom in a little bit. But at the top of the map there, you see Lampasas. I have friends that live in Lampasas and drive into work at Apple.
Yeah, and that's part of it. That's why I mean all that space up in the Georgetown across to Llano to Bryan. Even Bryan College Station is growing a lot.
That's right.
So people, their commute time might be elevated to an hour, but it's not because of traffic. It's because of distance.
Yep.
So,
Yep. So numbers, take a look. Let's see, we can go to monthly if you want.
Well, I think
this is number of home sales, by the way. It's not actual pricing.
Yep.
Interesting. I mean,
but you can see there where where it really started to happen was
March.
Yep.
Right. So the blue line is 2020, black is 2021, and green is 2022. I mean, interesting to see how 2022 even dipped underneath 2020 towards the end of the year here, right? Because of the interest rates, because of the influx of homes, the flooding of the market of listings, if you will. You can see the trend line of 2022, the sales dropping.
And I was working with one of our team members to some of the numbers and found, at least in the certain area that they were, she was working with a client, the shift happened in April.
Yeah.
From March to April, there was a big shift of inventory and sales. So,
and again, these are just number of sales, by the way. 2021, it was 3,197.
Yeah.
So if you had your home on the market in November of this year and you're wondering why there was no traffic, I mean, look at the amount of sales. Now, technically, this is the traffic from October or September,
right?
That you're seeing, but still,
we were busy for, like you said, May 2020 through.
Look at October of 2020, 3,600, 3,685,
which is
right,
breaks our average a little bit.
Now, sales price, I mean.
And I think
it was trending, but I
think what this shows us is the correction, because
I mean, you're seeing the spike as we get these numbers reported. You're going to see that the appreciation that we were going through here, basically got truncated into a couple of years.
And what we're going to see is that line is going to have to. Well, actually, those were some of the numbers I looked at on the Austin Board of Realtors. Is the median price has gone down.
Yeah. Oh, absolutely. Absolutely. Yeah. I mean, anecdotally, I have a listing that I'm going to close for, I would say, conservatively, $150,000 less than what I could have sold it for almost exactly a year ago.
Right.
And that's me being conservative.
Right.
Again, no crystal ball. I can't go back to the past to tell you what would have happened, and I can't go into the future and tell you what is going to happen.
And I think for me, it was just
when
I had some clients, it's like, get it on the market now, and that was March, April, and I had some people that had they waited another month, it would have been a lot different.
Yeah.
What other numbers do we have?
We're seeing that. What other numbers? Well, now we're going to get even more local.
Okay.
So we'll pull that one down.
Yes, this one. This is one of my favorites.
Yeah.
Because this really, so what you're seeing here is, if you look over on the left-hand column, that's the area, that's the MLS area that we look at. And I often don't just use that. I often go to the elementary school, because that really is a good picture of when you're trying to price a home, or buy a home, and what price you're going to offer. But let's just look at 1B, that is Central Austin.
And give you an example, like 1B covers all of Tarrytown, some of Old West Austin. It even technically goes to up 2222 to the Mount Bunnell area.
Right.
So even you can even get more local than 1B when you do the schools, right?
Exactly. Yep.
When you focus in on an elementary school or middle school or a high school, you're going to get something else, but
that's even smaller than the MLS area. But if you look at 1B in Central Austin in 2022, there were only 21 homes on the market. In 2023, there were 76. So that's a big increase in supply.
Yeah. And this was, by the way, this was just as of basically this past week, just a few days ago,
which is amazing.
Yeah.
So you went, look at almost 4 months worth of inventory when we were looking at half a month of inventory last year.
Yeah.
Look at the sales price. The decrease in the median list price was almost 30%. So,
and these are list prices. These are not sold prices, but still.
But it shows you that people are, this is what CLS, where are we here? This is
Austin Board of Realtors numbers from Austin Title.
But I mean, yours. To see.
Oh, yeah. Cedar Park, Leander South.
Oh my gosh.
22 to 101. Yeah, wow. But look at the price difference.
Right. Well, but that's also.
Hold on 1 second, folks.
Yes. Uh-oh.
Busy house.
So if you look at CLS, there were only 22 last year at this time. We have 101. That's a 360, almost 360% increase. So the sales price, though, went from 572 to 516, which is only about a 10% change. So let's look at the Northwest Austin, where the Apple is. And then I want to go find...
you want to do NW?
NW,
okay.
Which is right around where the newest...
There we go.
Yeah. So...
Yeah. Okay. So
similar to this area, which actually this area is close to that Apple campus. So it's not really surprising.
Well, I mean, it's interesting to see the number of listings difference and the price difference isn't as big, right? But like,
of course, wouldn't you say 77 is similar to quote unquote a normal year?
Yeah, I mean, I
16 was probably low, but yeah,
I think it's closer. I mean, yeah, this is all fluid. This is
sure.
You know,
sure.
Where was it? I think there was one up here. We did talk about downtown Austin.
Oh, right.
26 to 78. I mean, that's not a huge difference.
No, but look
at the starting, price. But look at the price difference.
30% decrease.
You got a condo in downtown Austin.
And I think that that's part of it that's, again, you have to really drill down. But if you think about this being downtown, it's a lot of condos.
Well, and there's new condos coming. So that's the other thing where there's more factors than just, hey, it's this one little area and everything's fixed. It's not. It's what you're also looking at is, oh, well, they had an influx of new builds or new projects coming. Cedar Park.
Real quick, do you know what HS is? I don't know which one that is.
I'm trying to remember.
Okay. I don't remember that one.
Yeah. But so you see 10%, 8%, 34%.
Where is look at LW 40%. Oh yeah. And that again has to do what we find is, as I was mentioning the target earlier, it often starts out farther from the center of that target.
Right.
And so
right. That's good. That's good.
We're
trying not to bore. Yeah.
One more and then we'll wrap it up.
I'm just getting started.
Oh no.
I'm just kidding. One more. So this is from our buddies at the Housing Report, Chris Jacob and crew. Again, guys, we're showing you what we're looking at from other industry professionals as well, to try and give you an idea of what things are doing. Hopefully that didn't just pause our video because somebody's calling me. Yeah.
Are we still going?
Looks like we're still going. Yeah, looks like we're still going. So, real quick, cost of owning versus renting single family. I mean, you wonder why some people pulled out of the market. Look at that over here, October 22. The difference.
Is that to own? Oh, more expensive to own than to rent.
Housing payment cost of owning assumes purchase of a home at 80% of current median price. So we're looking at your pretty typical, 80% down, that type of thing.
Right.
And
but is this national or is this Austin?
I think this is national. So we are kind of, we're kind of out there again, but still, I mean, it's impact. It affects everybody. I think the chart's just interesting to see. I mean, look back at October 2009, even April 2009, all the way through October 2017.
Right.
Yep. Right. There's a little blip there. It's just a great graph to show, expense wise of owning versus renting. It's cheaper to own than rent a single family starter home.
Again, I don't want to use silly phrases, but it's 100% interest rate when you rent versus
Absolutely.
when you buy. And so if it's something that you can do financially, eventually buying is better for your bottom line.
Absolutely. I mean, if you think about the average rent in Austin, I think we're hovering somewhere around $1,800, $1,900 a month.
Yeah.
You do that over a year, you just gave somebody $20,000 or more that you could have put into a home.
There is some.
But at the same point, because of the interest rate fluctuation, that's what we're really seeing. Because of that interest rate fluctuation and some inflation as well, I might as well stay in the rental because my home payment's going to go.
Well, and there are some creative ways to purchase if you feel like you can purchase with others. Absolutely. It may not be, a relative or something. Well, it can be a relative, but like, let's say you and I didn't want to live in an apartment anymore. We want to gain equity. There are ways, and of course that's more using an attorney to do it, but there are ways to purchase something together. So you're both at least getting some equity as opposed to not. So there are ways to do that too.
There are always options, but we're talking about what happened in the past, right?
Sure.
And why people got scared.
Right.
And I'm not only talking to the buyers, we're talking to our prospective sellers here.
Sure.
what's been going on in the market and why is it happening this way? This is why it's happening. This is where we've been and how people responded. Right.
So would you say this one that you have up now?
This is Austin. This is definitely Austin.
This is Austin. Yeah. Would you say this one is good news for buyers at this point because there's a bit of a correction?
Yeah. I think you see, because of the chart here, you can see in 2020 to 20, to the end of 2022, you just, the line's just going up.
And
it went almost straight up. So it's got to come down. And you want to see that
dotted line go down, which it is doing right now. So it's less of a percentage of your income. We're
trying to get down to that little more of an average. Right. Absolutely.
Got it.
Linear, principal and interest versus, of income. Mm-hmm. Yes, that's the affordability factor. You want it to come back down to where it's 30% of your income, not 50% of your income.
Right.
But what's interesting is look from 01 to 2009-ish, it was 40% of your income. It's been essentially 2011 to 2020 where it was 30% of your income.
Right.
So yeah, we got some corrections to go on. Right. And keep in mind, this is a correlation of interest rates.
Yep.
And housing pricing and inflation.
Supply and demand.
It's not.
Yep. And it'll be interesting after we go to Keller Williams family reunion next month.
You think we're geeking out numbers now?
Who? No, I'm just kidding.
Yeah.
So, bottom line, or me.
I'm the one who knows the phone number.
I can give my number.
No.
It's on our website.
It's on our website.
www.theottgroup.com.
She got that right. Yes, don't leave me hanging. There you go. Load up talking about it. All right, so here we go. I mean, we've already talked about this a little. It's a pretty chart. Thanks, Chris Jacob. Thank you. Yeah.
And we're going on 45 minutes now.
Who cares? We'll watch it later. We need
to have a sing and dance behind us going on.
Yeah, I'll get my wife and her sister. Somebody. Who's here? Who can? Yeah.
No, but we have it on our schedule to get back into a habit and a routine of Facebook Lives and sharing those videos with you.
I kind of like the 11 o'clock more than, I think we were trying to do 10 before.
Oh God, no, 10's not good.
We may have to do lunchtime so people can watch us during their lunch
That's
break,
a good idea. Yep. So send us a note what time works best.
Well, we didn't talk about this graph. You don't want to talk about it?
Oh, I missed this one.
See? Rolling 30-day average sales price. Yellow line is 2019.
Yep.
Gray line is 2020. Look at the jump from 2020 to 2021. Look at the gray to the orange. I mean, this is huge, people. This one's not interactive. It's just a picture that I've blown up. And then the jump again from 2021 to 2022. Now, this is average sales price. But you can see as the year goes on, things kind of level off or slow down.
Yep.
Right.
Well, the busiest closing day of the year is the last day of June.
Right.
So I think that, I mean, again, no crystal ball, but I think for 2022, at least for the Austin area, you're going to see those lines probably converge again between the blue and the red. You can kind of see it over here on the left. This is like a dark blue or a black line. This is 2023 projection. And we've been discussing this. And when I say we, I mean the industry, our team, the people that are presenting the numbers that we're showing you. We all believe that the numbers are essentially going to level off somewhere in correlation with 2021 numbers. Yep. So if your neighbor sold in 2021 for 600, you're likely going to sell something close to 600. The 700's gone. Yeah. At least for right now. Possibly, that's the way it's looking. Yeah. But we are already seeing an uptick in
traffic
because how many of our team members went under contract?
Right.
Just this week, several. So
holidays are over.
People are taking action. So if
interest rates have leveled off, they're not going crazy. If you're ready
to buy or sell,
no, call me. You know the number. What's the number again?
No,
512-222-6881.
People don't call. Just go to our website. I'm just kidding.
Or go to our website.
www.theottgroup.com. info@theottgroup.com.
Yeah, there you go.
Okay.
And I'm just now seeing some feedback. Supposedly the chart couldn't be seen. Sorry, guys. We'll iron out the text issues. We're still working on that.
Man.
I tried to get that fixed. But,
all of the charts?
Well, fortunately, that was 45 minutes in. So hopefully, if you've waited for 45 minutes, you will just call us or visit our website to get that information.
Well, definitely call us because we can share this info. So.
Yeah. Yeah, this is fun.
So
what, 2 weeks? We'll see y'all in 2 weeks.
Is it? Oh yeah, before we go to Anaheim for family reunion.
Yeah, no. We've got one even before that.
No, that's what I'm saying.
Yeah, so we got 2 before we go to family reunion. Okay. Yeah, we got one at the end of this month.
Again.
It's like I've got an ugly house. You don't want to be here?
I'm kidding. Look, I like being here so much. I borrowed one of your sweaters so that we can match.
We could be Twinkies.
We're in Mr. Rogers' neighborhood.
Hey, what are you trying to say about my clothes?
Hey, I think I remember helping you find clothes when you were younger.
Okay, stop.
Okay, see you later. Great.